Hello traders, Gary Wagner here, just about 10:25 in Honolulu, 4:25 in New York. It is Thursday, August 11th, 2016, and this is the Daily Report for Gold and Silver. It is certainly a risk-on day with the NASDAQ, S&P, and Dow Jones Industrial Average climbing to new record highs all on the same day. Obviously, that risk-on is putting pressure on the precious metals. We do have gold trading lower today, moderately lower, off about $8 on the day at $1343.70, the low $41.40, and the high 59.4, putting it off 0.6%. Silver also trading under the gun, off about 0.8% or 17 cents, at $19.95. The high today, $20.31, and the low $19.90 if we round that number up. Let's take a look at our first chart. So traders, absolutely no doubt, significant pressure to the precious metals markets. Gold specifically looks like it's down currently at about $7.50, roughly in that area, trading at $13.44. We, of course, put a long position on at $13.54. There's our entry price right in here. And today, what we're seeing more than anything else is a lack of follow-through. That can be expected considering the fundamentals that are out there with the U.S. equities markets moving to new record highs, the NASDAQ, the Standard & Poor's, and the Dow Jones Industrial Average. We do have a stop, and that stop is sitting just below 1335. That's a 61% retracement. It is a 61% retracement from this spike up here, or this last rally. Market came down. Still, I believe we've got some very, very strong probability that this trade will work out and work out in our favor. Of course, right now it is against us $10. And the key is right now is that we did not see the follow-through that I had hoped we would see on a technical basis, meaning another green candle and update today. And the one thing that is a little bit disheartening is really the way the market came up yesterday, especially in overseas trading, moved to these highs above 60, but couldn't have the steam or the wherewithal to actually keep that on a closing basis. But we still had a green candle in the market. We still got a confirming candle with a higher high, higher low. So it met all of the criteria. Now, this red candle, of course, is an engulfing bearish. It's engulfing completely the prior body of the day. Also, when we take a look at the low is just at around the 50% retracement, 42. Our low today being 41.40. So that seems to be a logical place where we still have some decent support in the market, and that's what we're going to look for. As long as this particular area holds, we could easily see a recovery. You will get times in which the market will consolidate. And this, I have to say, is certainly not a consolidation. A consolidation would be kind of like this move down here that occurred back, mid-May of this year. As the market comes down, you get this engulfing bullish right here. It comes in a decent target area, meaning it matches up with other things that we look at, such as Fib retracement. But then the market really consolidates for 2 days in a row before a tremendous spike up. And then after that tremendous spike up, you get another 2 days of consolidation. That's not what we're experiencing here, because you had a rather large move in the market. Rather, what we're seeing, if in fact the market does recover and move back up, what we're seeing is something more along the lines of you had a spike in the market, and then you had a moderately strong follow-through or down day, and that was, of course, just prior to the market really taking off. And that's what I would hope we would see. In other words, we absolutely have a risk-on day. Money's going to flow into the equities markets when you have those kind of numbers coming out and those kind of records being hit. At the same time, we have major fundamental data that's supportive of gold and the precious metals complex as a whole. So we will simply have to see how this unfolds. For the interim, traders, maintain your current long position, maintain your current stop. So traders, absolutely no doubt, risk on day. But the other thing we want to consider, of course, has been dollar strength or weakness, because a lot of the net gains came on the heels of dollar weakness. As you can see on this dollar chart, it's a daily, but as the market came down from about 97.50 down to about 95, we had that clip up here, but over the last 2 trading days, of course, it's been that weakness that was very supportive of gold. The opposite is happening today. We do have a stronger dollar, up about a quarter point, but traders, that's only half of the picture, because we're looking at gold being off, call it $8. About a little over half of it is directly attributable to a strength in the US dollar, and about $3.45 of that move down, it can be attributed to direct selling in the market. So it really is a combination of both. And traders, lastly, do want to take a look at silver. Silver, in my opinion, after having this tremendous spike up that occurred right in this area, in which the market truly, genuinely traded from about 1550 and spiked up as high as 21, you can see that here, but really 2050, 2060, that is a strong area of resistance. You can see all these tops right here and these tops right here. You also have a really strong area of support that comes in just below 1950. So you have this defined and narrow trading range. We pointed that out yesterday when we looked at a weekly chart, but this daily chart, you can still absolutely see this market is in a tight and narrowly defined trading range. I personally would want to see it break above it. That would signal a buy, or below it, that would signal a sell. But as long as it trades within this range, I really need to see a breakout one way or the other. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.